Thanks a lot for joining us, Pirojsha. Always wonderful to have you on the channel. Another successful fundraise, marquee names coming in. Talk to us start with talking to us about the objective of this particular fundraise.
Thanks very much, Ajaya. Great to be with you. The objective of the fundraise is to pursue rapid growth in the sector. We believe the residential real estate sector in India is poised for fairly dramatic growth in the years ahead, and that we are fairly well placed to capitalize on that. The sector is also consolidating quite rapidly with leading players gaining market share. Despite we think being the leading residential developer in the country now, we estimate our market share at something like 2%, which speaks to us about the kind of opportunities for growth there. So this capital will be put in to source land, either through joint ventures or outright purchases, which in turn will greatly help us scale the business over the years ahead.
So there's this, slight change in business model which you have conducted lately. Past couple of months, we've been listening to the narrative of earlier you were just an asset light model and more of an asset manager and executor of projects. Now you've started also purchasing land, and I think this is what you're taking forward with this fundraise as well. So can you explain to us, are you getting good opportunities in terms of good valuation of parcels? Prices have become much more fair now in the market, or you think that a blend of buying parcels and then developing yourself, and of course joint venture model, that blended model is a much better model going forward?
Yes, we do think for now that we'd like to pursue the blended model, as you put it, with some joint ventures as well as some outright purchases. What has allowed us to consider buying land, which we historically haven't done, is that we do see valuations at an attractive level given the stress the industry has undergone over this down cycle over the past 8 years. So we do think there are good land deals in the market, and that the cycle that we'll be developing most of these projects that we acquire now in is likely to be a much stronger cycle. Already over the last 6 months, things are getting better. We expect to see that trend continue over the next few years. And therefore, land acquisitions we do now, we think will be quite value accretive for the company. And that's why we specifically timed this capital raise during this period, because we see an opportunity of maybe the next 12 to 18 months where land values will continue to be reasonable while property sale volumes are increasing. Beyond that period, it's quite likely that land markets will start tightening as well. So our hope is to fully build up our development portfolio that we need over the next 7 or 8 years during this window of time where this opportunity continues.
Fair point. So basically you want to load up on inventory enough for lasting this cycle which is starting off now. Talk to us, which regions do you mark for yourself where you see good growth and good valuations, etc.?
We've been focused over the last few years on the top 4 real estate markets in the country, which are, of course, Mumbai, NCR, Bangalore, and Pune. Each of those markets is a very large opportunity in its own right. And our market share in each of these 4, despite being a top 3 player in all of them, would be still in the low to middle single digits. So we think there's a huge opportunity to scale our presence in these markets. Cumulatively, they account for well over half the value of real estate sold in India, and therefore we'd be addressing a large part of the overall opportunity. So the idea with this new capital is to double down on that strategy and continue to strengthen our presence in these 4 markets. We may also consider entering a new market like Hyderabad, where we see quite positive dynamics, but most of the investment will be within these 4 cities.
Mm-hmm. Your launches in particular, among very few and rare ones, take off very well. The moment you announce in the next 3-6 months, 50% of the inventory is sold off because, of course, the reputation of the brand and the way you've executed projects historically. When your representatives on ground are now talking to clients, what are the sense are you getting from the consumer end for demand? Because the economy went through an unprecedented shock. Many consumer spaces we speak with, top managements, was a bit hit. Give us some feedback from your own sector.
Yeah, I think the sector has frankly rebounded faster and stronger than anyone would have guessed this time last year. I think, the first quarter of the financial year for the sector as a whole was quite a challenging period, with construction coming to a halt, with most buyers wanting to wait and see how things played out. But if you look at it already by the third quarter, things were improving quite meaningfully. Construction work was on at full speed. We had higher numbers of labor on site by September than we did pre-COVID. And if you look at it over the last two quarters, demand has also come back very strongly. So our own sales in quarter three grew 25% year on year. We expect similarly robust numbers in the fourth quarter. And that's really true of most of the major listed players in the country. So I think there is a skew from customers who are preferring to purchase from stronger developers who they don't have concerns about from a delivery perspective. But certainly, I think the overall industry is exiting what has been quite a long downturn, really, since 2012-13. The sector has been in a continually declining part of the cycle, but we do think over the last 6 months, the next leg of the cycle has begun, and that will continue to play out with stronger volumes and hopefully some pricing movement as well over the next few years.
Talking of pricing, almost every industry leader we speak to right now is talking about how input or raw material prices have been rising and becoming a challenge for their own final product. You're also from an industry which is witnessing steel prices going higher, cement prices, other materials. Are you being able to, or the sector being able to price it in and pass it on, or that is becoming a bit of a challenge? What are your thoughts?
I think, we do expect that through the cycle that we will have strong ability to pass this on. I think, the real estate cycle typically starts with the recovery in volumes, which is what we're seeing over the last 6 months. But pretty soon after that, typically prices do start moving up as well. And if you look at it in India today, we think in terms of fresh supply creation, the last 3 or 4 years have been an abnormally low period because most developers have been focused on managing their current liquidity issues, on monetizing their existing projects, and haven't really had the capacity to invest into new projects. That's going to show up in market supply dynamics over the next couple of years at exactly the same time that demand is picking up, which I think will lead to a situation where it is more favorable to the supply side from a pricing perspective. Again, there's nothing very revolutionary about it. It's a typical real estate cycle. When things are bad, supply gets constrained. When demand starts coming back, you have a period of undersupply, and then the reverse happens because I think this sector, one of the challenges is that from a supply perspective, it takes quite a bit of time to react to what you're seeing in the market. It's not that a developer who wants to create supply basis today's market conditions can do so overnight. They have to go out, buy the land, go through a fairly complicated regulatory approval process, which does end up taking a couple of years.
Right. Give us a feedback on what kind of inventory are you sitting on right now, basis your recent launches in different geographies or regions?
Our inventory is actually at an all-time low at the moment. So we measure it as in terms of everything we've launched, what percentage has been sold, and we're well over 80% sold at the moment, which to us is an indication that we are being able to successfully monetize the projects we're bringing to market. So the key focus of the company will be to enhance the number of launches. I'm happy to share that we think the current quarter will be the quarter where we've launched more projects than in any other quarter in the company's history. We expect FY22 to similarly be a robust period for launches, and then to ensure that sustained momentum can be maintained through business development, which in turn will be supported by this QIP we've just completed.
Right, Pirojsha, not only is your stock very high quality investment grade, but your products also very high quality investment grade. Not only users but even investors look forward to your launches. What are the launches you've lined up for our viewers and your shareholders and everybody who's interested in real estate as an asset class? If you could give us some idea.
Yeah, we have a large number, something like 10 launches we're trying to get done just this quarter. So we have an exciting project in the heart of Noida in Sector 43. We have a project here in Mumbai in Chandivali. We're in the process of launching in Bangalore, plotted development. So there's a whole list of of our other projects. So I think the launch calendar is very full, and we hope to see very strong numbers through these launches over the next few months.
One last question, Pirojsha. We are witnessing a lot of buying interest and improved liquidity condition in the smaller towns, the tier 2, tier 3, the beyond metro towns. Any brand we speak to, apparels, automobile manufacturers, so home improvement companies, almost everybody is saying that the smaller cities of India are flush with liquidity. And the other thing which we have seen is that national level players such as yours, good reputation players for execution, etc., still not gone into tier 2, tier 3. What are your thoughts? They are still grappling with sub-quality players there. So do you see opportunity for your company or overall for at least the top tier companies to start also entering beyond metros? How does that scene look like?
Yeah, it's no question. There's an opportunity there. I think from a company strategy perspective, it's a little bit a question of timing. I have little doubt that over the medium to long term, we will enter a lot of these markets. But over the short term, it seems most important to us to further strengthen our position in the leading cities. As I mentioned, our market share is still in the low to middle single digits. Even in these cities that we have a strong presence, we certainly see room to expand that. And I think focusing on that first, allowing a little bit of time for the smaller cities markets to develop a little bit further so that a player like us can enter and do 5 or 6 projects simultaneously. Because our experience is that if you go into a city and you're only doing 1 or 2 projects, you typically don't end up being successful in those, because you do need to invest a lot of time and capacity in building your capabilities to effectively compete in each individual market, because real estate ultimately is quite a local business.
Sure. Just one query comes to our mind. Some of the marqueest names have come in your QIP this time as well. What were some of the questions these guys are posing at you or your other colleagues as well on future growth outlook beyond the immediate numbers, which I'm sure your team will, sustain the run rate? But what were their queries like?
Yeah, I think you'd make a good analyst, because a lot of the questions we've discussed today were some of the questions we focused on. They wanted to understand our growth aspirations, our ideas about geographic presence, which kind of asset classes we wanted to play in. Were we going to remain focused primarily on residential, which we are? I think they wanted to obviously get a sense of the Indian real estate market, how we saw that evolving over the next few years, and what gave us the confidence that we could successfully deploy this capital to scale the business. So it was a good set of conversations.